Well, there's our little pullback. Now, this is not the massive, terrible pullback that it feels like it is. Really, it's only of a move of a little bit greater than 5%. Very similar to this move that we saw back here at 111K, down here to about 4.5%. So I know a lot of you are probably feeling a little bit salty, and given the vibe on X, or crypto Twitter, as we affectionately call it still, even though it's not Twitter anymore, feels like Bitcoin's back at 20K. I mean, it's so wild that while Bitcoin is still holding at $105,000, I'm close to $106,000, the vibe is completely down the tubes. Why? Well, probably because a lot of altcoins are still suffering and they're not making all-time highs like Bitcoin is. Because Bitcoin dominance is pumping higher, because Bitcoin is pumping all the stuff that I've been telling you about for a while. So hopefully, you're sitting in the green right now, just like me. 70% of my portfolio in Bitcoin hasn't changed. I'll be telling you when I'll be making that change towards alts, the bigger shift towards alts. But I want to focus in today on this pullback. Are we done? Is it going to be going higher? And what are some levels to be watching? All that in today's video here on Coin Bureau Trading. My name is Aaron Dishner from The Better Traders, and you're watching Coin Bureau Trading. Subscribe now to join me and my co-host Dan to explore the crypto markets, to chart them, to do all the fun stuff that we love to do on this channel, which is everything to do with trading. So, short-term pullbacks are a little bit painful. And given the fact that from the top to the drop, right now we're only down like 6.59%. This is nothing. This is literally a drop in the bucket. Considering all the volatility we saw back over here in December, we saw like this massive pullback of 17%. Now that is a pullback. This is a fart. This is a hiccup. This is a burp. Like, this is nothing. This is not like getting impaled, playing Elden Ring for the gajillionth time, dying in the same spot over and over and over. This is nothing like that, okay? This is like falling down a little trap in Mario. Like, this is absolutely nothing to be worried about. But because we're having yet another pullback, it is worth spending a little bit of time to look at the price action, to look at the chart, and also figure out some targets. Now, the first thing we need to do is to use some Fibonacci levels. And you've already heard me talk about these a lot for a lot of good reasons. So I want to first look at the 2025 Fib levels. And that's measured from our top here in January all the way to our drop here in April. Now, what's interesting is that we had a full retracement, meaning that the price fell down to our low, and it took some time, but eventually we worked our way all the way back up to the 1. Now it hit our 1, jumped above it, fell back down, and now it's struggling again. So one area that we can highlight right now is this $100,000 level, which makes a lot of sense, especially given the fact that the price fell down back into it as support. So I'm going to go ahead and just put a horizontal line right here. We're going to have a lot of lines in a second. So we're just going to start with 1. Okay. The next level we need to look at is our 2022 Fib levels. Why am I skipping this one? Just give me a second. Let me cook, okay? 2022, looking back at our top to the drop, November 2021 top to the November 2022 bottom, we've already seen Bitcoin push above our 1.272. And this measurement has given me the confidence, wrong line, confidence to also plot the 1.618 Fibonacci extension level of about $173,000 as a market top, at least a target for a market top. Now we got things going. Things were feeling really, really good, especially last week, making a new all-time high at $111,980. And then the market's pulling back. Well, I'll tell you this. We did see the market struggle to push and hold above $103,000 back over here in December and then again in January. We got rejected, went right back up, almost like that Chumbawamba song, and then we see it shoot back above. Now, the first target, honestly, that I think is stronger because the longer, the more zoomed out the measurement, the stronger it is. Looking at a local Fibonacci measurement isn't a bad idea whatsoever, but it's not as strong as 2022. So we have another level here at $103,000. So this is another level that has to be held. Now, why did I save this March 2024 level? Well, because you're going to be a little bit angry with me, and I'm a little bit angry with myself, to be a little bit honest. I'm going to hide these guys and show this. Now, We know that the role of the Fibonacci levels is to give us ideas of where the price will find resistance and support once it works its way up to retracing back to the 1, just like we saw for our our 2025 Fibonacci retracement drawings. And then when it goes up higher, we can see some targets like 82K and here 95K. But one thing I didn't pay attention to is I usually don't look at the 2.0 level, but look at the price right here. It says $111,082. Would you believe me if I told you that back over here, the price literally kissed it and it got rejected from it? It's a little bit weird. But going back to this level, so we see a level that's a little bit more, actually I'm going to say a lot of it more dramatic, which is down here at 95K, a level that I really don't want to see. So we have 3 different levels. The first short-term level is right here at $103,000. Again, from the 2022 Fibs, we have just above $100,000, which lines up with this one pullback, which is not a really good barometer of strength, we'll say. But having lots of price action at this $103,000 level is a good barometer. And unfortunately, 95K is reasonable for several reasons because price action found that as at least a pivot point and a pivot point here. I don't expect the price of Bitcoin to go sub $100,000, but we also need to be prepared for that if it happens. And by the way, you have been watching my videos, I assume, and you have been keeping up with me on my positions. And I just want to let you know that my open long position, the automated position I had over here on alt trading, got closed in the green, not in the red. Even though it's a meager 2% win, at least I closed with a 2% win instead of a 2% loss. This is the way I trade. This is the way I love to trade because if I protect profit, I have peace of mind. And I use a compounding strategy. So that little $13 win is going to go into my total amount. So that way the next trade is going to have a little bit more in the position. So that way I'm going to continue to compound my position as it grows over time. So this is a great way to protect profit. And you know what? Bitcoin could bounce from here. And I actually think it has a good chance to. But I need to draw your attention to something first. Earlier this week, I wrote another Bitcoin pullback incoming. What happened to the breakout? Everything was centered in this video around these TBT stop loss hunting alerts, which I showed you back over here on TradingView on the 30-minute channel. And the reality is that they just keep firing. You can't see when the new one starts. I don't have a way to clearly separate, but these alerts only last for 48 hours max. So you can see the 48-hour mark right about here. So we've actually had more, and another one fired literally an hour ago. What does this mean? Well, when we see a lot of these firing over and over and over, it's letting us know that we're entering into a period of a lot of volatility. And 90% of the time, like I said in this video, we should be expecting Bitcoin to move to the downside. I know. Not that fun. So what do we do? How do we navigate this? Well, I actually want to direct your attention down below in the description of the video, because even in the description of this one, there are fantastic links that can help you. This is called the Coin Bureau Trading Channel. Part of being a trader means putting your stop loss in the profit zone and getting stopped out with a little itty bitty profit. Again, a little bitty itty bitty profit is way better than a little loss, because if you cumulatively lose 2% over and over and over and over again, you won't have a portfolio to trade with. So trading is really central to this channel. Therefore, you need to have a good exchange for trading. And we have bonuses that are already set up for you. Coin Bureau has negotiated on your behalf for CoinCatch and 2Bit, which are both non-KYC requiring exchanges, plus Bybit, which is a KYC requiring exchange, not available to everybody, but CoinCatch and 2Bit are available to people in North America, which is amazing. So you go to those links, click on them here, and when you sign up, once you generate a certain amount of trading volume, then you get bonuses after you sign up, whether it's for CoinCatch or it's for Bybit. Now, there are more deals on the Coin Bureau website. If you go to the link that's in the description below and click here, get the hottest crypto deals at coinbureau.com/deals, it takes you to this page. The first thing to do is to check out their subscription service, the Coin Bureau Club, which is a Discord server that has tons of data, information, and stats shared by Dan, Guy, and Nick. It is insane with how much information that they are sharing there. It's ridiculous. It's fantastic. And it's great because it's happening 24/7, which is amazing. There are other exchanges, other tools to sign up for. Plus, there's a 10% discount off of our course, The Better Traders, 15 Minutes to Financial Freedom. If you hit this little buy now button, it'll take you to our website. And the course comes with one-on-one coaching. It comes with automated and active trading strategies revolving around all trading. And it's a one-time purchase. There's no subscription-based fee. Once you own it, you own it. Even all the updates, all the upgrades, all the additions, everything. So, talking about trading, and again, this is something I've been doing for a long time, actually for 10 years. When I look at the chart for Bitcoin right now, and I see it putting in these lower lows, it's obviously taking out some short-term levels. So looking at our Fibonacci levels for targets, that's one thing that we can do. Another thing that we can do, and you're not going to like this one at all, to be honest, is to draw some short-term support levels. And what I mean by that is taking our low here and finding a support level. Now, the reason you're not going to like this is because right away, we get a rejection. Right away. Even right here, we get a very clear rejection. And even if we draw it out right here, clear rejection. And we can't just keep going lower and lower and lower. Really, we have to pick one of these and stick with it. So because Bitcoin's move has been so vertical, it's not really a reliable source of information. That's why I'm using these Fibonacci levels, because the price action has been, dare I say, parabolic. I know, I don't want to say it because parabolas are typically the last stage of a bull market, but this is hardly a parabola, especially compared to some other moves. Now, other things that I want to be looking at in regards to a pullback would be RSI. If daily RSI finally falls low enough to be oversold, and I determine oversold values as being lower than 25. Actually, I just realized I'm not zoomed in all the way. There we go. It's a little bit better. So when this orange line falls below 25, like it did back over here in mid-February, this is typically a good re-entry, rather a conservative entry for BTC. Note it did it back over here again in April as well. We are not anywhere close to that happening. It would have to fall another 47% just to be oversold on daily RSI, which is actually a good sign, to be honest. The fact that Bitcoin is not yet oversold means that we're not really that bad right now. It's not great, but it's not as bad as it could be. Volume continues to look so-so. On-balance volume is looking good, but obviously price action right now is a little bit less than desirable. So the next thing that I'll do is I'll look at the TBO. And what's interesting about the TBO, which stands for the trending breakout indicator, is that the price of Bitcoin dropped right to the daily TBO fast line. Now, if you subscribe to my YouTube channel, which there's a link for that down below, you've heard me talk about this trading technique or this trading strategy where we get this TBO springboard bounce, where a really bullish asset has a pullback to the TBO fast line and it bounces off of there. That's personally what I'm expecting to see from Bitcoin, to be honest. Even though it's having a pullback, even though we have these other levels here that are reasonable levels of support, I am personally believing that Bitcoin will bounce from here and then it'll start moving up higher. I know it doesn't seem likely, but in my opinion, that's what I'm expecting, mainly because we have our breakouts and I'm still waiting for these to realize. And for all of you naysayers out there, I want to draw your attention to the fact that the previous breakouts that we had way back over here, this one was amazing. It just went right away. Usually they don't. Usually they'll take some time. If you see the breakouts right here, this happened. The last one was on the 14th of February. Oh, how cute. And it took a couple of days, 10 days for the price to break out higher. And for all of you that didn't get why that's cute, you really need to get away from the computer and start dating again. I'm serious, this is not good for you. 27 bars from the last breakout right over here, about a month until the price actually materialized a breakout. The main thing that determines the strength of the trend is the slow line, and the slow line was ripping higher and higher. And you may have heard me talk about this recently. And the truth is that the TBO slow line is starting to curl up a lot more, which is a great sign that even though we're having this 5-6% pullback, as long as this line is curling up higher, it's actually giving me more confidence to buy the dip. So yes, we have fib-based support levels. Yes, we have the price falling back to the daily TBO fast line. Yes, unfortunately, it's pierced inside of the cloud, which isn't a good sign. But we're also seeing, actually, it fell below support too. But we are seeing good vibes, especially on the weekly time frame, especially with the TBO. Yes, it's looking red this week, but keep in mind, we just had a streak of how many weeks being green? 6 weeks green, which is amazing. Actually, 1, 2, 3, 4, 5, 6, 7 weeks green. That's awesome. Just like this move. So it's okay if BTC is a little bit choppy right now. I'm focusing on the good side of things. Now, I want to draw your attention to some other charts here. And you'll notice that all these charts right here end with a .D. That's because all of these are dominance charts. What gives? Why are we talking about dominance all of a sudden? That we're talking about Bitcoin's price action, where it's going to be going. Well, dominance charts actually do an amazing job of letting us know what we should be expecting in terms of the market shifting. Dominance, after all, is showing us the crypto pie and how much the crypto pie is being dominated by Bitcoin, stablecoins, Ethereum. You get the picture. So one thing to keep in mind is that typically, and I'll say a gross estimation of 75% of the time, don't quote me on that, because I don't have the data to prove it, but I will say more often than not, that's a safer way to say it, when Bitcoin is dumping, usually we see Bitcoin dominance increase. Why is this? Well, we typically see it increase because when Bitcoin is falling, we know that Bitcoin is in high demand right now. So seeing Bitcoin dominance increase while Bitcoin's price is decreasing is actually a bullish signal that there is still strength in the market. Conversely, if Bitcoin's falling and Bitcoin dominance is falling, that's a really bad sign. That's something systemic is happening and it's really bad. Like Terra Luna bad, like FTX bad, BlockFi Celsius bad. You get the idea. Now, another chart to keep in mind is stablecoin dominance. I talk about this every day because I look at it literally every day. And as stablecoin dominance starts to move higher, this is an indication of an increase in fear. When we start to see that crypto pie start to become more and more dominated by stablecoins, this means that the market is either getting stopped out or they're feeling fearful or they're panicking. They're deciding, you know what? Nope, I don't want to buy anything else. I want to go back to stablecoins again because I don't like how things look. I think things could fall more. So as we see stablecoin dominance increase, and this is literally the smallest little itty bitty baby amount of increase, just so you know. But when we see this increase, this is an increase in fear. So seeing it now inside of the daily TBO cloud, just so you know, this is something that I call bullish consolidation. Bullish consolidation, and consolidation, by the way, is a fancy word for chop. So just going like this. But bullish consolidation is chop to the upside. Bearish consolidation is chop to the downside. So seeing it inside of the cloud tells me that we could see stablecoin dominance continue to chop up higher. Now, Aaron, you just said you expect Bitcoin to go up a lot higher. You just said you expected to bounce from here. Yes, I know. But we also need to pay attention to the signs. Macro, still bullish, very much. Short term, we'll see. But I'm not really worried because a little bitty pullback like this for BTC isn't that big of a pain for me. And again, if you watch the video that I posted earlier this week, you should... Can I do this? If you watch this video, you heard me also talk about this, the multiple factor effect. I'm not going to bother playing it, but I'll zip ahead to the part of the video where I say that. Thank God it's not one of those weird, like, frozen little frames. But the multiple factor effect is exactly what we're seeing play out right now. And it's evidenced by charts that are grossly underperforming Bitcoin. Bitcoin only fell yesterday about 2%, but we saw so many charts dump way more. Ohm down 11%. We're seeing Ondo down 4%. We're seeing TIA down 6%. We're seeing carnage all over the place. Of course, there will be shiny green glimmers of hope here and there, which is always nice to see. But for the most part, it's looking pretty rough. And Bitcoin is just kind of like, I'm okay. So going back to me saying, when I'll be allocating to alts. I'll be allocating to alts when I start to see bearish signs here for Bitcoin dominance. I don't see them yet. Not on the daily, not on the weekly. Do I want to see them? Are you kidding? Of course, I would love to see some bearish price action from Bitcoin dominance because when that, again, crypto pie starts to shrink in terms of Bitcoin dominance. When Bitcoin is dominating less of the market, that means dominance is shifting somewhere else. And if stablecoin dominance is falling with Bitcoin dominance, then that means those two dominance levels have to be absorbed or sucked in by something else. And that's going to be Ethereum dominance, top 10 dominance, and others dominance. Now, Ethereum dominance has been on quite the move recently, and I'm honestly shocked and surprised that it actually pushed above the daily TBO cloud. Why is this such a big deal? Well, for one, from back over here, Ethereum dominance, was at about 7.39%, and it's moved up 30% in a month, which is wild, considering the fact that Ethereum dominance has been awful. It used to be at 17%. And I mean, that's not even the top. That's just July. If we go back further, can you imagine a world where Ethereum used to dominate the market up to 22%? But look at the date, December 2021. And since then, I have to scroll out so far. Oh my gosh, it's fallen down 68%. So please understand me when I say that I'm shocked, because this is what I'm used to seeing for the last 4 years. Ethereum dominance above the cloud is a big deal as well. This is the first time Ethereum dominance has been above the daily TBO cloud since June 2024. Basically a year, like 11 months. Now, the obvious challenge ahead of Ethereum dominance is, can it stay above this cloud? And if it can, that means that my guess is that Ethereum will be outperforming Bitcoin. Now, it has not necessarily been the best metric to watch, Ethereum dominance, because for the most part, Ethereum dominance has been so closely tied to the price of Ethereum, you'd think it's like it's missing twin and it's found on some weird TikTok call. Have you seen that video? I think it's staged. But moving over to other coins, Solana and others, these are two charts that we care way more about. And unfortunately, I don't have time to go into why this is such a bad sign, but seeing this breakdown that still needs about 17 hours until confirmation, trust me when I say we don't want to see this yellow dot stay. This is not a good sign. This is a very, very bad sign for our top 10 tokens. Others dominance, of course, will always perform way worse than the market, than the general top 10 tokens, because it's lower market cap coins, and it's unfortunately falling 2.25% today. As much as I love others dominance, as much as I want to see others shoot up higher, and others dominance is, by the way, a representation of the others crypto market cap. And again, we've had so many really close calls of it just going higher and higher. And unfortunately, we just don't see that energy right now. It's just bearish vibes. So I really do want to see others dominance go higher. I really want to see alt pump higher, but be really careful, because Bitcoin, while I do expect it to bounce from here, the truth is that a lot of these coins are obeying the multiple factor effect. A lot of them are grossly exaggerating Bitcoin's little pullback. And I know 5-6% doesn't feel like a big one, but again, this has been taking how many days? It's like day 7, day 8 of a pullback. So seeing coins grossly outperform Bitcoin falling lower, I'm not really surprised. And to be honest, you shouldn't be either, because I already warned you earlier this week. Again, another good reason for you to subscribe to this channel. Now, I know you're like, wow, this guy's a real bummer. No, trust me, my handle right there on X is Moon and Papa. So I don't like being bearish, but I also don't like being, like a perma-bull. And I think it's a really big trap that a lot of traders fall into, being one-sided, both perma-bull and perma-bear. We need to be flexible and move with the market. So for all of you that are like, well, you said this last week and you said this week, and just chill. You have to be liquid. You have to go with the flow. You have to go with the market, and the market will do some crazy things that you would not foresee, whether it's bullish or bearish. So we have to be prepared for anything that comes our way. And that means protecting profit. That means looking at lots of charts, lots of dominance levels to predict what's going to be happening next. So right now, to summarize everything, Bitcoin's pulling back. We have some support levels to watch. If it continues to fall lower, especially sub 100K, that won't be good. Alts will suffer. So looking for entries for those charts, you're going to want to zoom out. The video that I shared actually on Tuesday, I believe the day is when I shared it, is actually going to be a really good one because I talk about some techniques to finding pullbacks. You're going to want to watch that one next. So until the next time, you know what to do. Stay awesome and stay in the green. Peace.